Hello guys, in this video we are going to see what is stop loss in trading and share market. So according to Google, stop loss denotes or relates to an order to sell a security or a commodity, or let's say whatever asset that you hold, at a specified price in order to limit a loss. Okay, so it's a way of selling a security or a commodity to stop the loss that you might potentially be incurring. Okay, so let's see the question. How does a stop loss work? A stop loss order is an order placed with a broker to buy or sell a specific stock once the stock reaches a certain price. A stop loss is designed to limit an investor's loss on a security position. So as the word suggests, stop loss, we are trying to stop the loss by exiting the market at a specified price. For example, setting a stop loss order for 10% below the price at which you bought the stock will limit your loss to 10%. So it means that when you buy a stock, let's say you are saying that I don't want my stock to go below 10% of whatever I bought. Let's say you bought at a price of 100 and you are saying that I don't want my stock to go below 90. And in case it goes below $90, then I will just exit from the system. Okay, I don't want anything to do with the market. In that case, you can set a stop loss of $90 when you are purchasing the $100 stock. This is essentially a 10% stop loss. So this kind of limits your maximum loss to 10%. Now maybe we can go to the images section and there we will have better representations. So for example, let's take this image from Baby Pips. So here actually, let's say you bought your stock at this point. Okay, so this is where you bought. And now you are saying that this line, this dotted line is the maximum loss that you want to incur. Below that, you don't want to be in the market. So you will say like, sell when the price, in case the price comes down to this particular dotted line point, get me out of the market. I don't want to do anything with the market. Okay, so you bought at this point and what happened was that the price went up. Yay, the price went up. Then again it came back a bit downwards. Again it went up a little and boom, all of a sudden it came down. So this time frame could be anything. It could be 1 minute, 1 day or 1 month, but whatever the case, the price has reached the point which we consider to be the stop loss. Now beyond this, we don't want anything to do with the market. We just want to get out. So once it reaches this order point, we execute that stop loss and we get out of the market. So it means that whatever you bought at this point will get sold at this point and you will get neutralized. You won't be in the market anymore. Okay, so that's what we usually do. So for example, let's see in a candle. So if you see here, so we can enter at this point. While we enter, what we do is that we put a stop loss order. So since this is like the support, so we say like, beyond this point, sell it. We don't want anything to go beyond because it could be a breakdown and we don't know how much it may go down. So we put a stop loss here and we will have a target as well. Here we will say like, okay, this is the target. Let's take profit here. So this is how we what we mean by stop loss. So it is a stop point that is meant to stop the losses that you might be incurring. It's like a stop point. Below that, get me out of the market. That's what we are going to say. Okay. So the next question is, putting a stop loss a good idea? Of course, putting a stop loss is kind of like a mandatory thing that you have to do, especially if you are a short-term trader. This kind of gets you out of the volatility of the market and it keeps you safe. If you are a day trader, intraday trader or a scalper, putting a stop loss is a mandatory thing and you must definitely do it. Okay, but if you are a long-term trader, then there will be a bit of volatility that might be coming in. So here it says that actually while the term sounds specific, in practice it is not great. So this is actually more applicable, in my opinion, this is more applicable in terms of long-term trade. So there you must give it a bit of volatility space. But in case of scalping and intraday trading, I highly recommend you guys keep a stop loss because that's the best thing actually in that case. For long term, make a decision accordingly. You can have a bit more space for volatility because That's how the long-term fundamentals work. So it depends. In short term, it's best if you keep a stop loss in my recommendation. So here is an example for how we can use stop loss. For instance, if you have bought a stock at rupees 100 and you want to limit the loss at 95, okay, so you don't want the stock to fall below 95. In this case, you can place an order in the system to sell the stock as soon as the stock comes to 95. Okay, so it's like you are putting a pre-order in the system. You are telling the stock system, you are telling the exchanges that I will wait till it goes to 95. I will see if it comes back up or not. But in case it goes below 95, get me out of the system. I don't want to be in the market. So that is what. So 95 is the stop loss that we are putting here. Okay. So why is stop loss important? So stop loss helps to automate your selling of stocks, and hence you do not need to monitor your portfolio all the time. So essentially what happens is that when we buy a stock, we continually have to see, okay, what is happening? We bought it at 100 rupees, we'll see. So we bought it at 100 and in our mind, let's say we have a thing like, okay, below 95, if it goes, I want to exit the system. So it's like, you can do two things. Either you can look into the screen the whole time and see how the price is moving. If it reaches 95, then you can manually get out. So that involves looking at the screen the whole time and seeing what is happening. Or you can just automate it. You can just put a stop loss order and tell the system that, hey, 95 is the maximum loss I can take. Below 95, automatically take me out of the market. So in this way, what you have to do is that you do not need to monitor your portfolio, whatever you are investing in all the time. Automatically, you will get exited from the market once it reaches the stop loss. Okay, so a stop loss will be automatically triggered in case the stock touches a predetermined price. And it is really important to maintain the risk and reward while trading in the stock market. So this risk and reward ratio, if you want to maintain, putting a stop loss will be important. So what we mean by risk and reward is that, let's say you bought it for 100 rupees and according to your analysis and calculations, you are expecting the price to go to, let's say, 125. Okay, so that's like a 25 rupee jump. And you are feeling that you did another analysis and you are saying that, the support levels, the minimum or the maximum that you can lose is around 92. Okay, so that is around 8 rupees loss. So here actually, if you are looking at it, the maximum risk is 8 rupees, the maximum reward is 24 rupees. So that's like a 8:24 or a 1:3 ratio. So in order to manage these risk to reward ratios and to automate selling these, you can put a stop loss. So here you can say like, okay, so my maximum stop loss, I want to exit at 92, and you can keep a target as well. I will say like, okay, I will exit the system at 125 rupees. So it's like 92 ka stop loss and 125 may take profit. So these two ratios. So stop loss mainly does two things. One thing, it takes the tension out of your mind. You don't have to constantly look into your screen. Once it reaches that particular point, it will take you out of the system. You are tension free and you don't have to look at the screen the whole time. And two, it helps you keep a risk and reward ratio. It helps you automate everything. So these are the most important things about stop loss. And especially if you are an intraday trader or a scalper specifically, then I would recommend you guys do keep a stop loss, because it really helps you from incurring huge losses. And especially if you are in a really volatile market, keep a stop loss always. It always helps you stay safe.